Anyways, Yuri,
Okay.
please.
So,
I'm done. I've taken too much up.
yeah, no worries, no worries, no worries. So, good morning, everyone. Today we're going to be talking about whether it's time to buy or sell, or actually buy or not to buy, because and these are the turbulent times right now. People are scared. People don't know what's going to happen. Whether everybody's screaming and we're in bubble, or what's going to happen. So this is the topic of the day. My name is Yuriy Nesvit. I'm with EXP Realty, and so we're going to dive into this subject. So, do you want to buy right now? Because everything's going with 20, 50, 30, whatever offers on any single home. It doesn't matter where you look. It's crazy. Is there deals out there? Are there deals out there, or it is something you can buy, with no bidding wars? So this is something we're going to find out, and it doesn't make sense. Perhaps maybe it makes sense to wait 3 months, 4 months, 6 months, a year until everything kind of settles, right? So we're going to go through all of the topics today, and even the last month. I guess the answer to the question, can you buy right now? Yes, you can. In the last month, I've helped 2 people to buy their properties, and but you have to have all the ducks in a row, like your mortgage pre-approval, your knowledge about the area. It's almost like buying a car as well. Once you know which car you want to buy, then you can shop for the price, right? Otherwise, and houses are unfortunately not like that, because there's it's a 3-bedroom, but the layout could be different, or the neighborhood may not be the greatest. We looked at one property a couple of weeks ago, and it was awesome property, beautiful home, no bidding war, no set date for the offers to come in. And I said, let's run, let's take a look. Well, it was right at the cemetery, literally, So not everybody's cup of tea, some people don't care at all. Some people, it's a no. We didn't even see the house. Let's put it that way. So that's, to each their own, right? But, on the same token, it's, like I said, if somebody doesn't mind that, they definitely can buy that property and no hassle, right? So we basically help the people that want to relocate. Not like I said, because of these turbulent times, not everybody's buying. They're just sitting and waiting. But there's some people that relocating, whether it's a school or like a McMaster or work related, or just retiring from Toronto and buying something cheaper here. Investment properties as well. So people buying investment properties and trying to find that cash flowing property here. So there's all kinds of different reasons why people move, but those are I'd say kind of an urgent ones. They have to move, right? And like I said before, you have to figure out all those things like mortgage and everything else, so you're ready to buy, because you don't have much time to fool around. Now, with all of these properties going over the asking price, are you overbidding or are you overpaying? Can somebody answer me that question? Is there a difference overbidding and overpaying? Go ahead, Nathan.
Well, I guess it's partly a subjective thing, right? Because I mean, a property is worth what somebody's willing to pay for it, right? I mean, absolutely. Stocks are kind of like the same thing, but I also think that when there is these bidding wars, it's driving the price up more, because if you got that same property, like say you had $1 million house, right? Yep. Actually, I'll give you an example. In my neighborhood, there was a house that listed a couple of weeks ago for $1 million, which already in itself is crazy price, because we moved in that neighborhood 2.5 years ago, and our house we got for just over 600. So for us to go from a house to go for a house to appreciate that much already is crazy. But again, because there was a bidding war, I think the house sold for 1.2 or 1.3. So another 20-30% in price, just because there was all these people that were willing to spend a little bit more.
Right. But again, the question is, did they overbid, or just the property was listed $200,000 less than its market value, and people just paid the market value?
Yeah, that's another perspective for sure I hadn't thought of.
So Teresa, can you share the screen with me, or can I share the screen?
You should be able to share the screen. If not, Catherine or Ivan will have to give you that permission.
Okay, once they do, I can show the difference. But in reality, that's what's happening. Basically, the real estate agents are going, talking to the seller, and they say, well, here's the thing. We're going to get bidding war one way or the other. And really, it's irrelevant whether we're going to put $799 or $999, because your house is worth 1.1 anyway. And we're going to generate over that anyway. And, let's put whatever the amount and see what market going to do anyway, But when you look at the comparables, this is where the, true measurement comes in, right? Where you look at the very similar property and that sold not 6 months ago, because that's almost irrelevant at this point, right? In this type of market, that's irrelevant. So we need to look at that, and at the properties that only, 30 days sold 30 days ago, and that's going to give us a true indication of what the property is worth. And then compared to that, obviously you're not going to compare, same two apples, right? It's going to be a little bit here and there, but we can, we have the measures that we can take that to even out and see, okay, this property is a better location, or an extra bathroom or something like that, or extra garage space or a bigger lot, and that way, you can price it accordingly. So with that, I could have shown you.
But, you can try and share, see if it'll let you.
Okay, I can share now. Okay. So I can share the screen. So this is how many properties we have on the market today. 362 total, right? For the whole Hamilton, in every category across the border. You're talking about condos, single homes, everything. Everything's here. So hypothetically speaking, so we let's say, I don't know, take this one, for example, right? So it's upper gauge in Rymel. Yeah. It's a townhouse, right? 729, 4 days on the market, 303,000. Let's see what's inside. Beautifully done inside. Beautiful. I call these gorgeous properties, right? In my mind, and again, I've learned from two types to sell: ugly and gorgeous, right? Ugly goes for to the investors, gorgeous to the end user, and mid kind of range, they tend to normally, under normal circumstances in a normal market, they tend to sit a little bit, but the gorgeous properties just fly off the market regardless of the market, right? Sort of thing. Okay, now we see this. So I could do a full CMA through my own through my own resources, but I'm gonna do something different for quick. So 1752. I use House Sigma, which, okay, 1752.
Yuri, is this website that you're using, House Sigma, is that accessible to the public or is that a realtor thing?
It's a public, yes, it's a public website. You know, they're mostly in what do you call it, in Toronto, but they reach out here as well. So 1752 Upper Gage, Hamilton. Okay. And this gives you a quick rundown of what it might be. So here, because it's again, like I said, drop dead gorgeous. I can see. So the property is listed right now for $729. I don't see why it wouldn't sell for this amount, because it's, you know, staged and done right, and everything's there. So, and this is what I'm talking about, where the list price and bidding. Did you overbid? Yeah, if you go to over, even in this market, if you go over $1.1 million, then yes, you overbid for sure. There's no question about it, right? But they're comparing to all of these properties that's in this kind of category, and which I think 1 million is kind of overreaching, but I wouldn't pay over this amount. So if you paid over this amount, then you probably overpaid slightly. And the other thing, the other indicator, if you bought the property and the bank is asking for appraisal, and an appraisal came in at 700,000, well, guess what? You're going to have to reach out to your pocket and pay the difference. So, and that's kind of another indication that you overpaid. So that's kind of that example. Now, there's another solution to this. Also, what I do for my clients to avoid these bidding wars, we're looking for the properties that sit on the market for over 15 days, basically. What it basically means at that point, that either something's not right, or you has to requires renovations. In most cases, that's what it is. The property is, I shouldn't say it's dilapidated, but it needs a lot of work, and people don't jump at it. But in this market, like I said, anything you buy right now, probably by the closing in 2-3 months, the property's value gone up by $20,000, $30,000, $50,000, right? So that kind of stuff. So we have good luck with that. Going and bidding with those on those properties, and or not bidding actually. We bought one property for not $15,000 less than asking price. So they have to put in probably $100,000 work into it, but I'm pretty sure, not pretty sure, I know they paid way less than the market that the property is worth. So that's another thing. Another a source of property where you can't buy without the bidding war is the builders. Now the builders is a little bit different story right now than normally, because we have lots of inventory and everything's great. Now it's not the case. The inventory is depleted, and actually the builders are holding back the property while they're being built, because they don't want to lose their they don't want to leave the money on the table for someone else, because the property goes up in value every day, kind of thing, right? So and that's why kind of, again, that's that segment is shrunk. But then we have another one that's we've discussed last week. It's an assignment. You also can get without a bidding war, which is great. But again, you have to be quick. You have to have all your ducks in a row. You have to be qualified for the mortgage. And again, moving quick is a key at this point in this market, right? I'm using a little bit of a cheat sheet here. So Now, the question is, I guess, this is probably the most important question of in this presentation. Do you want to buy right now or you don't? Does it make sense to wait? We have the rumors or I guess probably not rumors that the interest rate is going to go up this year. How much, we don't know. So I want to show you a little bit of a presentation kind of thing, what it means really if the interest rate will go up. Okay, so can you see the slide here? Okay.
Yeah.
So if you're buying, if your mortgage is $500,000 at 2.9 interest rate at over 30 years, you're looking at $2,081 payment, monthly payment, which is interest $1,200, principal $873, right? It's all great. Now we're looking at here. If the interest rate goes up by 0.5%, from 2.9 to 3.4, then you paying $2,200 instead of $2,080. So it's roughly $150. $150 difference, right? Then if it goes to 3.9, you're almost paying $300 difference, right? Almost 300. And 2% difference, that's roughly $600, right? Payment. Now, will it affect buying power right now? Nathan, you probably have an answer to that. Sorry, you caught me
multitasking. What was the question?
Sorry. If the interest rate goes to 4.9%, would you lose buying power?
If the rate goes up, yeah.
You may be house broke.
Sorry, you're talking about an existing mortgage, or are you talking about if I'm pre-qualifying and the rate goes up in the interim?
That's right. When you pre-qualify and then the rate goes up to 4.9%, would you lose buying power at 4.9%?
Well, yeah, you wouldn't be able to qualify for as big of a mortgage because your income wouldn't change, right?
Right. And no, that's not right. Sorry to call you out on that.
That's okay.
But so you will be paying $600 more on your mortgage, but you still can qualify because right now we're qualifying at 5.25.
Right. Yes.
So we qualifying people on a 5.25, and this doesn't matter. You will be paying $2,000, but in reality, the government implemented this thing for a reason, right? If something goes up, you're still able to pay this, and this is why, like I'm saying, like looking at this, that right now you're paying $2,000 instead of $2,700. Is it seller's market or is it buyer's market? You're really getting the mortgage at the much lower rate than you're qualifying for. So that's actually, in my mind, it's a buyer's market, but we don't have an inventory, so it kind of overturns that, right? But so from this perspective, we don't have I have counterparts or the partners in the US, and they don't have this stress criteria, and of course that affects big time. So I did the math, and if if our rate was 5.25, if the interest rate went to 5.25, you would only qualify for $380,000 to have the same payment, right? So that would affect drastically. You would lose $120,000 in the house, right? But I mean, we don't know whether if it goes to 5.25, whether the qualifying criteria is going to be 5.25, or is it probably most likely going to go up, right? So we don't know that. But in the current situation, when people are saying, "Oh, these houses are going up," and this all of that jazz, and we're going to have a crash, because of that stress test, I don't think we're going to have a crash because of for that particular reason, right? And also, when you look at the demographics and excuse me, a good and old supply and demand thing, right? We don't have supply for for now and probably for the next couple of years. And with the the government just announced we have 430,000 people coming in this year. We still have a backlog of people that didn't come in for the year 2020 and 2021, the immigration, right? So we still have a huge backlog, and the houses are not being built in 1 month. I've heard that. I read an article that Hamilton had a killer year kind of thing on a building permits. We broke $2 billion in new building permits. Well, that doesn't mean that they were built last year. They're going to be built this year, next year, the year from now, 3 years from now. They're not being built that quick, right? And with the delays, with all the global situation, with the shortage of containers that come in from China, and all kinds of things, the construction delayed by 20, 30, 50% of the time, right? Yes, Nathan.
Just a question on the supply issues that we've been having. I like, obviously you sort of touched on newly landed immigrants kind of needing places to live. Obviously, I mean, they're going to come here and live in a tent, but the big factor that I've been hearing this year is still the pandemic, right? People are afraid to sell their house because they don't know where the world is going. So it's kind of creating this limit to the supply, and that's obviously driving up the prices of people that are in the market. Do you still think that that's a big factor to the way real estate prices are going right now and the limited supply that we're seeing?
For sure. But there's we were kind of scraping by without the new construction, a massive increase in new construction, right? We had enough existing inventory, right? But because the existing resale inventory dried up, everybody turned into new construction, and that dried up. So normally new construction kind of lags a little bit, and you can get a better rate or a better value, but you have to wait for 3 years or 4 years, right? So that's kind of. But people say, okay, we have no choice, but we have to put the money into there and wait 3 or 4 years. But at least we locked up the price, right? So that kind of stuff. So our equity grows in that segment, and yeah, we pay in the rent. It is what it is. But at least we grow equity in a new condo unit or home that we bought last year, right? Some people, one of these guys that I worked with in January, they bought in 2018 or 19, so their house is ready now. Their house, instead of $700,000, their house is like $1.1 million, and they sold there for instead of what we were thinking we listed at 1.88. Sold for 2.3. I mean, they made a markup there, $400,000 markup on a new house, $500,000 markup on this house. Not a bad idea, right? So they're one of the lucky segments, right? So that kind of stuff.
So follow-up question then on that is, you're saying the opportunity to sort of most increased value is on the new builds because you buy them, in 2018, 2019 for $700,000. By the time the project's done, it's worth north of $1 million. Do you see the same sort of opportunity in sort of, you sort of use the phrase the investor's dream houses, like the more dilapidated ones, or maybe they're just a little bit more outdated, haven't been renovated since the 80s or something like that. Do you see the same opportunity in that type of project versus a brand new property or a brand new construction?
I'm actually not a huge fan of pre-construction or new construction or assignments for that matter. We're resorting to that right now because there's nothing else on the market, right? 300 homes in Hamilton is absolutely nothing. Basically, when it comes down to, well, I'm looking for a house that's 700,000, 3 bedrooms, 1-car garage, and it shrinks to literally, you have a choice of 2 houses to look at. That's it. You don't, if you had 30, 40, that's a different story, right? So that's why people resorted to pre-construction assignments and that kind of stuff, because it's of the, for lack of a better word, desperation, right? There's nothing else. I'm a big fan of a cash flow. That's what they taught us in MBA, that you gotta have a cash flow, right? Every company has to have a cash flow. And why you shouldn't treat yourself as a company, but that's a different seminar, I guess, altogether. Where us self-employed, like, oh yeah, we or business for self. No, the business made money. Did you pay yourself? No, I didn't. Then you did. Your business didn't make money because he didn't pay its employees, right? So you have to pay, you're an employee essentially, right? So you have to pay yourself first and then see how the business performs. So, but yes, like this is my specialty, the investment properties. I love, turning single homes into secondary dwelling, where it's not a duplex per se. You don't need separate meters. You don't need separate everything, but you have to comply with a certain regulations where it's fire separation, enough driveway or parking spaces, right? The height of the ceiling, and there's all kinds of little different things. But when you have 2 incomes in the dwelling, that definitely kind of makes the purchase affordable. It actually cash flows, right? So right now at this point, if you rent the top unit for $2,500 and the bottom one for $1,800, we're looking at about at least $4,100 payment, right? So that's sufficient for about, I'd say $900 or so mortgage, right? So that, and those houses you can pick up for sometimes $700,000, sometimes $800,000 by the time you do the renovations. But you're not winning much, but you still, it's a cash flow in property. You still have a little positive cash flow. That's what I would do. That's what I like. So, but yeah, this is something also, kind of the last point that I didn't touch on. Did I answer your question, Nathan? Okay. So the last point that I didn't touch on is, so let's say you want to buy the house, but you saying you're not ready. This is, and you don't have enough down payment. I want to collect a little bit more down payment, just a little bit more, just an extra $10,000, maybe another $20,000. And boy, it's so wrong on so many levels, because the market is running away from you like a train. You trying to say, like we've seen, last year was 26%. The year before was 20% or something like that, 22%. So it's a 50% increase of the properties over the last 2 years. I know it's not the standard market. I know it's not a regular market, right? But how do you account for that? How do you know next year is not going to be this, this crazy? And it might, like, not this year, but not next year, but this year, the 2022. We already seen 13% increase. 13% increase in 2 months. So what does it tell you? Like, I mean, so like I said, you don't wait to save, because unless you're saving $50,000 a year or something like that, by all means. But otherwise, I don't know many of those people that can save 50. If you're saving $50,000, you probably already have the house, most likely. And I mean, that's another conversation, I guess, for another day, because there, unless you scored, some crazy paying job, $500,000, but those are those are exceptions rather than a rule. So that's pretty much it for this presentation. If you have any questions, let me know. But like I said, to sum it up, I guess, buying or not buying, it's definitely your question. I'm here to help guide you through this process. Especially, this is not your normal time, but when you buy in the property and God forbid something happens, then Nathan will tell you, and everybody's like in stock market, don't sell when the property, when the stock's going down, right? If God forbid the property goes down, sit tight, and next 3, 4, 5 years it's gonna go back up, and yes, you have to I know it's emotionally, it's crazy, like, oh, my house, I paid $200,000 more than the property's worth, but if you pay in your mortgage, it's not gonna, the bank's not gonna pull their loan. So just wait until it rebounds. I know it was several kind of corrections where the property dropped by 10-20%, and it went back up within a year. So no panic. If something happens, don't panic. That's all. Nathan, you have a question?
No, I love what you said there at the end about don't panic when your house or property drops in value, because I'll sometimes use the analogy of if you know your house is worth, say, $800,000, and ironically I use the expression, a realtor knocks on your door and says, I've got a buyer for this house that's willing to offer you $550 for it. What would you do? And 99 times out of 100, the client says, no, I would sell. I would tell them to go take a flying leap. I know my house is worth more than that. And I kind of attribute that to, a stock portfolio, right? I mean, TD is still TD. Amazon is still Amazon. These companies have not fundamentally changed in any significant way. The market is just giving you a raw deal for your money, or for your assets, basically, right? Same thing with real estate.
Yeah. You touched on a very interesting point, and I don't think it's going to take the full seminar to explain that. When I'm listing the house and I'm going to the prospect's home, and they say, "Oh yeah, we had someone very famous in Hamilton here," and you know who I'm talking about, probably.
I think I do. Yep.
And they said they have the buyer. I said, did they bring the purchase agreement? No, but they said they have buyer, they're ready to go. It's like they have the buyer, just you have to sign the papers. Like, well, you know what? That's great. That's awesome. They have the buyer. Tell them to bring the a purchase agreement, because that to me, that's the biggest gimmick out there that realtors are using. That they say, oh, we have a buyer. Like I said, you probably, well, I'm showing maybe at least 20 houses, 30 houses until they say, yes, this is our house. We like it. Yeah. Again, under normal circumstances, right? Not right now. Right now, I'm telling people that it's a matter of buying it, not matter of liking it. Unfortunately, you have to buy it, and then you grow into it, and then or grow. Live in it for 2 years, 3 years. You don't like it, we sell it, and you buy something different, right? Mm-hmm. Especially with young people, you can't miss out on I know it's like FOMO, fear of missing out, Unfortunately, it's kind of the reality. Even if the prices will go down, they may go down by 10, 20%. We're not going to see a drop by 50%. It's not going to happen. So
right.
Like I said, because of that stress test, because of the shortage of inventory, I don't see that happening. Even if the interest going to go up, we're not going to see it unless they increase the qualifying rate from 5.25 to something higher, right? So nothing's going to change there, period. Because people will not see, we're not going to see that buying power reducing, right? If we see that power reducing, then yes, absolutely. Then it drops, and then you only qualify for 380 instead of 500. Then the prices might be going down or freezing a little bit, right?
Yeah.
But then again, it's a snowball effect. If somebody doesn't qualify for 500, but only qualifies for 380, but then there's someone else that was qualified for 700 now qualifies for 520. I mean, they have to manage the expectations, and that now they're just going to buy lesser house. That's simple as that. So you may not see that effect in the house prices, right? But what I'm saying is, like when the realtor comes in and says, I have the buyer for you, Mr. Realtor, bring me the buyer, so bring me the agreement of purchase and sale, we'll talk. And I can guarantee you in 9 out of 10 that there is no agreement of purchase and sale or buyer, or that agreement of purchase and sale is, like you said, Nathan, maybe $200,000 less than They know you're not going to buy it. They literally, my wife can write one for $200,000 less, and guess what? If we buy, we buy. If you agree, we buy. If you don't agree, we just walk away. Simple as that. And trust me, I'll find the financing for something that's worth $700,000. I'll find $500,000 for it. Like somebody will buy it. So that's it. That's it for today. I'm 12 minutes ahead of schedule. So if you have any questions, let me fire away. Doesn't have to be related to buying or buyers.
Yeah, no, I think that was good. Awesome. Some good information, Yuriy. Thank you.
Thank you.